Good morning, everybody. Welcome to the Flow Show. 1st of July, pinch punch, first of the month. No returns, I win. I'm not champion in the house this month because I got beaten to it by the kids this morning, jumping all over me. So I'm not pinch punch champion. I'd been running for the 4th month on the trot, but that's been spoiled now. I'll get them next month. Hope you're doing fine. Morning, Kay. How's it going?
Hey, morning, Ryan. Morning, everybody. Yeah, doing all right, mate. Doing all right.
Good to hear it. Right, let's get cracking straight into it. We've got a few market moves going on at the moment, and much as I've been warning about the last couple of days, looks like we've got some new month, new half, new quarter flows coming in, just like we had end of month flows coming in. That can happen at this time of year when some firms close off positions for reporting, reallocate some of their trading positions into new assets, other assets, whatever, can bring some flows in the new month as well. We look like we're in the mix of that, which we'll look at shortly. Right, let's get cracking. Had some data out from China, more data out from China, I should say. We had some yesterday. Now we've got the Beijing manufacturing PMI, which came in better at 50.4, moving into expansion from contraction. So looking better in there for China. A load of data out of Japan as well. As you can see there, the Tenkan Index, which is closely watched by the BOJ, some quarterly numbers coming out for that one, which by and large was okay. Some a point drop on this number here, point drop on that number there, one up on that one there, unchanged on that one there. So nothing too ground shaking from that lot there. You can see the small index number dropping a pip there, the other one coming in unchanged. So ups and downs, but only minor moves from that one. Doesn't really change the picture as at all. Then we had their manufacturing PMI, which was a little bit softer at 50.1, though again, it's moved into expansion, just not as much as was expected. The Bank of Japan have been speaking to automakers, and they found their views to be a bit mixed on the US trade policy impact. Some said that they face cost pressures. Some said that the pricing has caused extra or additional profits, but there's been no clear impact on investment, according to those discussions. The BOJ are all about watching the impact from all this trade stuff. We've had new board member Masu speaking, and he's going to be a fence sitter, it seems. It doesn't have any strong disagreement to the BOJ's view that underlying inflation is still short of 2%. It is in full agreement with the message from UEDA, and went so far to say he's standing in the middle of the Dove-Hawk scale. So no real signals from him as one of the new bods. Not that we were expecting any, but it was confirmed by the Ministry of Finance that there was zero intervention between the 29th of May and 26th of June. Over to a bit more data. It said PMI data from a lot of countries. You can't find it. There we go. Australia moving backwards a bit, was expected to stay unchanged at 51, but they dropped 4 little pips to 50.6. Yesterday we got the final German numbers, which pretty much looked exactly like what we got in the, if I can find it, where's it gone? 1 o'clock, there we go. What we got in the regional stuff. CPI coming down a point, a bit more than expected to 2.0. The Eurozone measure also doing the same, coming down a point where it's expected to go up. As I mentioned yesterday, that North Rhine-Westphalia is really the one you need to keep an eye on when judging what the main numbers may do. It's one of the bigger regions, and that came down 2 points. It's been a flood of central bankers out today. I'm going to leave the fucking central bankers. They're already pissing me off. We'll just look at some of the other data instead. First, Italy CPI. Oh, no, I've done that. That's yesterday's stuff. Wakey, wakey, Ryan. It's coming to this morning's. So PMIs we've had coming out. Spain, a nice improvement, 51.4. That's their first reading, not a flash reading. So a positive one there. Switzerland had a bit of a wonky one. They saw a big jump in their manufacturing number, but a big loss in their services number. Italy, PMI going backwards a bit there again. First number for that one, not a final. So slipping further into contraction, was expected to go up. France had a little bit of an improvement over their flash number at 47.8, but still in contraction. Germany was unchanged over their flash number, still in contraction. We also had some unemployment data. Unemployment was up 11,000. The unemployment rate, though, staying unchanged. Eurozone, the pan-Eurozone number, a little point improvement, 49.5, but again, still in contraction. UK as well, staying unchanged, 47.7. So no real pickup in manufacturing of note, except in some other countries outside of this side of the world anyway. We're going to need to watch that, particularly in Europe, with all this defence spending stuff. I'm not saying it's going to come through in one big hit, obviously. It's all going to come through slowly but surely, but we should see at least sentiment improving, particularly in Germany and things like the IFOs and the zoos and whatever, if all this spending is going to produce the goods. If it doesn't, I've tried to think what's going to happen to rates in the Eurozone, because there's not much of a pickup elsewhere in the economy. We had CPI data as well from the Eurozone, a flash number, all in as expected. The core coming in 2.3%, so unchanged over the prior. CPI ticking up a pip as expected to 2%. Right, I suppose I've got to speak about the clowns. So we have Bailey out. He's not supposed to be, or he wasn't scheduled to speak until later on today in the panel event with Powell and whatnot, but someone obviously caught him while he was having his cornflakes. He says we have to watch for inflation pressures. He's pretty much no shit Sherlock comments coming out of him. He says, is labour market softness going to come through? Well, we've already seen that last week when we got that shoddy jobs report. It says, I don't believe quantitative tightening is causing the steepening of the yield curve. He says the yield curve is steepening partly as a response to a high level of uncertainty in the global economy. So absolutely nothing new from him. ECB BODs, this is their party in Sintra, so they're all out and about as well. Simcus says any move on rates more likely to take place towards the end of the year. Not sure if the ECB will have all the information it needs by September. So he's ruling out a move at September meeting, which is the next forecast meeting. Says the inflation outlook is fragile and an undershoot is a bigger risk than an overshoot. And we are starting to get a few warnings about the euro. It says must monitor the speed of euro appreciation. ECB's Nagel says we're in calm waters on inflation. Said that while floating on a lilo in calm waters on his holiday. Says policy is in neutral territory and the euro is not exceptionally high against the dollar. That's a sort of green light German version. ECB's lunch says broad consensus is that the job is mostly done. ECB's lane, ECB must stand ready to counter any deviation in CPI. De Guindos, he's putting a number on the euro. Firstly, he said an additional cut is not going to help the economy improve. We need certainty. Says the level of euro isn't a problem, and says even 120 is something we can overlook. Kazakh's more big euro gains could boost a case for another cut, but hasn't moaned about the level. Further rate moves are about signalling and fine-tuning, not big moves. Wojcik, high defence spending will contribute somewhat to inflation pressures. Kay, we're all about the euro. I keep saying it. They're all happy with it until they're not happy with it, and then they got to get the genie back in the bottle.
Yeah, but for the time being, I think the one who set the speed, and that's going to probably be important from here. Yeah, the Windows sticking 120 on it. It's we may see it today at this speed. Yeah, I'm still not. I mean, I'm still not convinced that they will stand too much in front of it, or it will spark a rate cut. But because I think, well, Lagarde started it all right, and I think she understood that investments into the eurozone are okay, having the effect to strengthen the currency, but it's also good for the governments, especially when they want to expand and spend, and usually it weighs a bit on the interest rates as well, and so they can fund a bit cheaper. So for the time being, I wouldn't think they are that worried, but sticking a level on it, like for instance, 120 is pushing themselves a bit in a corner, and I wouldn't do it if I were at the ECB anyway. But yeah. Because the thing is, they obviously central banks want quiet markets, right? So maybe that was the Guindos why he said 120, because they don't want to end up in a situation where we had like years and years back, where the euro all of a sudden rushes to 140, right? But yeah, I don't think that anything is like really pressing them to start to weigh on it. It's going to be interesting this afternoon in Sintra, when Lagarde, Powell, etc., are all going to be there. What will be said about the euro in particular, if they already say something? But I trust Lagarde with all comments that she has given, that she will talk about it. But yeah, I don't think we're in a overshoot of the euro situation yet, by any means, by any means.
Yeah, and
And also, if I may, I mean, let's also not forget, this is a lack of confidence in what in the American policies right now. It's not only euro that is doing it. It's really a no confidence vote for Trump and all those guys' fiscal policies.
yeah, and I'm going to issue some little stone love. Okay, anyone who mentions intervention from the ECB is going to get a red card. Okay, don't even think about it. Maybe if it goes from here to 130 in a couple of hours, that might be something that may be touted, but they don't do a Ministry of Finance, Bank of Japan moves on this. If they're going to do anything, they'll do intervention via rates or threaten about rates. Anyone who remembers Draghi last time, the whatever it takes, when the euro was strengthening significantly. So no one even bother to think about intervention if the euro keeps going higher. Otherwise, I'll red card you and kick your ass.
No, the ECB is totally non-interventionist. That's going to be only happen in disrupted markets. I mean, they
Yeah,
are never going to stand in front of a move with their reserves.
yeah, exactly. We are getting what the press are describing as a moderate hawk because it's all change at the Dutch central bank. Olaf Schlepen is replacing Klaus Knot. So that happened as of today. So new central banker there. So we'll be looking forward to his comments, like a hole in the head. But sometimes the first comments are the most pertinent because it sets his stall out as to whether he's a hawk or a dove. But as I say, the press are painting him as a dove. As a hawk. Fed heads, Bostic expects tariff impacts to play out over time, says the business's response to tariffs could stretch into next year. Brilliant. Says the Fed has the luxury to be patient. The jobs market is solid, but not as tight as before. US consumers are showing more precaution. Gold is, they're on the forecast bandwagon. They've got their TIPEX out again. I don't know, I don't go long TIPEX supply sometimes, I tell you. So they were expecting at their prior forecast just one cut this year coming in December. Now they expect 3 cuts starting in September, and this is for the Fed. So all change there. However long that forecast will last, probably till next quarter, and it will change all over again. Right, trade waffle. There's been press out that apparently Shiba is going to weigh up Trump's suggestion that Japan buys more US oil, which was pretty much on the table from previous. Anyway, they talked about buying more nat gas and energy from the US. Excuse me. And now Trump wants them to buy more rice, which, if you're wondering why rice is a big deal, there's several reasons. Firstly, there's a big rice shortage in Japan due to a harvest failure in 2023. So they're doing a lot more importing. They do produce more than they import by quite some margin, by about 4 to 1-ish. The US is their second biggest supplier after Thailand. So another reason why the US perhaps wants them to buy more rice. But it's also, it just seems like this is yet another stick with which Trump is trying to get stuff done with Japan. He's really going after them for everything now. And it's still looking like things are at loggerheads. So as we're approaching this deadline now, 2 things we need to be watching for with Japan and others. If negotiations are continuing in good faith, as described by the US, then deadlines can get kicked. If not, then tariffs are getting slapped on. But I think Japan is likely to be the potential biggest price risk. The surprise will be if they get a deal done before the deadline. Otherwise, confirmation that there's no deal and things are still tougher could see a bit of a wobble in the yen. Though where it goes after what we're seeing today is another question entirely. Treasury Secretary Bessent has been out saying there will be a flurry of trade deals going into the final week before the 9th July deadline. That's been confirmed by EU Sefcovic, who's flying to Washington today for talks after some high-level meetings in Turkey. The EU apparently is going to accept Trump's universal tariffs, but they want some key exemptions. Bessent also was talking about the Fed chair and on speculation that he might be prompted to the job. Says we'll do whatever whatever the president wants, but says I have the best job in Washington. He also laid into the Fed thereafter, saying they seem a little frozen at the wheel here, and saying that they made a gigantic mistake in 2022 on rates. Trump has also been back to slaughtering the Fed and whatnot, posting pictures signed to Powell and all crap like that. Trump himself said he will send a letter to Japan on tariffs, so we're really pushing the buttons there. Kate, just on the this Japanese trade stuff, are we going to get a deal? Are we going to get a can kick?
Well, what we think should happen and what is actually happening is the total opposite. Yeah, Trump is still bullying them into replacing Thailand, China, whoever on the rice import list in Japan. We had a bit of a discussion. Well, there was a question about it. How it comes that Japan is importing rice, just because what you said, and also there's been a huge increase in demand due to the multiplication of tourists in Japan, and also they have been changing their eating habits and eating even more rice apparently, the Japanese. So yeah, but it's just one of those. But I mean, it is somewhere a deaf man's negotiation. I mean, the Japanese, they don't they don't know anything else but investing in the US, and Trump is still not happy. I don't know. I'm at a point where I don't know how it's going to go. if we don't forget that in a couple of weeks, like less than 3 weeks, we have those elections in Japan, and if the LDP gets enough votes, Ishida will be strengthened by it as well, and probably even go more on the defensive and trying to explain to Trump why he shouldn't be doing this or that. Again, I don't know whether they are going to find a deal before the 9th of July. I'm going to say right now the odds are probably against getting a deal done, which is completely the opposite of what we thought from the start, that the Japan-US deal would be a shoo-in, you know.
Yeah.
Yeah, so yeah, I really don't know, Ryan, where we are or what's going to be decided.
Yeah, very much so. Right, as the saying goes, hope springs a turtle, because a German government spokesman really expects that the 18th EU sanctions package against Russia will be agreed this week. This is going to be the one that really hurts. Not the 19th, the 18th one. They really think it's going to impact Russia, which may be a case because Russia's central bank is apparently considering lopping another 100 basis points off its rates at its next meeting near the end of July, according to the deputy governor. So they keep throwing these sanctions on Russia. There has been an economic fallout over there, but Putin will worry about that. But we're getting an 18th EU sanctions package. It will be the one. I tell you, it's going to be the one. In other news, Musk and Trump are going at it again. Musk put out a tweet saying that Trump's tax bill is debt slavery, and he vows to unseat all Republicans who back it. Trump responded in kind, saying that maybe Doge should look at all the subsidies Musk is getting, because without subsidies, Musk would be screwed. And that's subsidies on EVs, rockets, all the rest of it. So that bum fight is kicking up again. Cheers. That's about it on the headline front. Unless you've got anything else, Kate?
No, not really. Just a comment from SNB's Zanetti while we were already on the flow show, saying that negative interest rates are an option in Switzerland. We have all the required instruments, even with zero interest rates. It exactly pushed Euro Swiss up 1.5 pip, and then came back to the lows. I mean, the market is really not impressed with whatever S&P is doing with even potentially negative interest rates. It reminds me a little bit of when Japan was in deflation. You do whatever you want, even put interest rates net negative. Market is still buying your currency.
Yeah, and do you think we're in a speculative mode here, where the market's just trying to push the ECB's, the S&B's buttons a bit, or is this just natural fallout from what's going on in the dollar? And
okay, until yesterday we were saying, like, okay, nearly every month end we have seen Swiss franc buying, and again we have seen it. We have seen a continuation of it today. Perhaps a little to a lesser extent, because it's more of a dollar move that we are seeing this morning than perhaps in the Euro Swiss, but still we're trading around the lows. If it continues tomorrow, Ryan, I'm going to say yes. Now we are starting to speculate, and that may be that we are on the last legs of it. Thinking about that. Well, roughly double. You're on the weekly, but there's a rough double bottom there around 92.90. We go through there and trying to make a move towards the prior lows. Yes, we are going to be in speculation mode. I would suspect, and then we may run into a bit of smoothing action. The thing is, as we know historically, unless something would really change dramatically and that they are extremely pissed off, S&B will be sitting on the beat. They are not going to go to the market and pay offers to put Euro Swiss back at 95, 96, or dollar Swiss back above 81, 82 or so, unless they go. And let's not talk about 2015 because everybody in the market is talking about 2015. It was a completely different scenario then because the S&P was defending a certain level on the Euro Swiss and then pulled the bid. But again, already there, they were not going into the market and buy Euro Swiss aggressively. They were just defending a level. And unless they are really pissed off, I think we are going to see the same thing if they come in. And again, I think if tomorrow we continue on this same path, then the risk is increasing that they are going to sit on the bid at certain levels. Is it the dollar Swiss? Is it the euro Swiss? Now at the dollars. If they that all the dollars are getting sold right now, and again, it's the first day of the quarter, first day of the month. This may be a one day situation somewhere as well, but if the dollar is getting sold versus everything, they are how should I say? They are experienced enough to know it's probably not the dollar that you want to go and sit on the bidding, but Euro Swiss may be the easier one. Scare the markets a little bit, perhaps. So I can imagine that they put a bid in which would be 93 and a half or a little bit above the market. But most of the time they just go sit on the beat and then defend it, right? Which in turn is going to first scare a little bit the market, but then maybe even increase speculation. But it's a bit. I must admit that I don't understand really what the market is up to because all the data in Switzerland. Oh yeah, we saw a little bit of a blip higher in the manufacturing PMI this morning, but all the data apart from that in Switzerland are not great, and we know that the Swiss manufacturers and the Swiss companies are not very happy about this. But then on the other hand, we also know that Schlegel and his mates are not Jordan, and Jordan would have been a lot more vocal and or even already be in the market and show a bit of a middle finger to Bessent and his clique, but as they usually have done. But yeah, I think if it continues tomorrow, then we are entering real speculative land. I don't know about it today. It could just be a continuation of the flows that we saw into month end.
Yeah, exactly. And the usual warnings. Okay, if you're trading this, don't trade it expecting the S&B to come to your rescue or help you out. If you've got a reason to trade and try and catch the knife, then that's your trade. If the S&B decide to sit on a bid or anything or send out a couple of comments, that's a bonus. It's not a trading strategy. Okay, so if you've got levels you want to try, then give them a go. But don't just trade it because you think the S&B are going to ride in and give you lots of profits. So trade.
Yeah, well, yeah. I am a bit long Euro Swiss, but there is, as I said, I've got a fundamental reason. I've also got getting even if it's not much, getting a little bit paid to be sitting in the position. But I'm not going to hide and say this is a comfortable situation because over the past few days, I mean, there's only been one-way ticket in the Swiss franc, which is a little bit going against what the market usually does as well. I could understand why Swiss was strengthening when there was risk off, when equities are coming down, but there is nothing of the likes going on. So yeah, I've got my fundamental reasons. I've got some levels that I have in my mind as well, but I'm not going to let it go too far under 92.90. And if it doesn't work, it doesn't work. I mean, that's the risk that we trade when we trade. But again, as you say, I mean, don't trade only because you think S&B is going to step in and put Euro Swiss back at parity. I mean, there is no way. That's only in our wildest dreams they would do that. And if they would, I mean, then I think we're going to end up with a situation like 120. But again, it's not the scenario I'm thinking of. I was just thinking that Swiss should actually weaken a little bit on the basis of fundamentals.
Yeah, yeah. So yeah, I mean, there's a decent couple of levels here, as Kay pointed out, in Euro Swiss. I'll be looking a bit interested if we get down into this 82s, 92s, 92 and a halves, down to these sort of lows down here, if we ever move down there. But this could also just be a bit of a continuation. Now we're over the the end of month hump and everything. This could just be a continuation of what we've been seeing with an exit out of the US. Bit of a risk move as well. I mean, the yen has picked up a head of steam today. It's coming to the short term. When that kicked off pretty much bang on 8 o'clock this morning and has kept going. So to say, as I've been warning, you can get new month, new quarter, new half year flows coming in that can be just as strong as what we see at the end of the month. Have we matched that low or nicked below it? No, we haven't matched that low yet, down 142.80s from the 13th of June, so keep an eye on that. But the fact, Kay, that yen is moving the same way as a Swissy today, at least. Gold is up on its highs at the moment. Could we say this is maybe a bit of a risk move and a return to what we had before last week and all the end of month stuff?
I'm going to say no. I'm going to say it's just a dollar move. Nobody really wants dollars right now. I also reckon that what we are seeing today, I think the momentum funds are involved as well. They have probably been selling dollars the whole European morning, and we may see more once the US arrives. It's just a continuation of the dollar. Yesterday, I was wondering whether we could see a bit of an extreme on the dollar and then start to correct. So I've let most of my short dollars go, and I feel pretty naked right now because this is just a continuation. But again, I think the real day for measuring it. But today there's still a lot of hours to go, and I don't think that US is like in a position to start countering all of this. I'm not sure, but I don't think so because I think the momentum funds are at work. But tomorrow is going to be an interesting day, and then we are going to run into the NFP. So, but I think really tomorrow, most of the time, the second day of the month, we see if the moves are viable, if they continue or not.
Yeah. Mike asks if Japan has no deal by July 9th, shouldn't the yen go down against the dollar? Yes, on paper it should, but as we've seen for today, yen pairs were looking strong yesterday and they're looking weak today. The deadline risk is still there, so you can't. Like with a lot of markets at the moment, you can't even trade 8 days ahead or position for 8 days ahead because so much can happen between now and then. So I certainly wouldn't be buying dollar yen just on the basis that they may not get a trade deal in 8 days' time because it could go down another 200 pips before it goes up 50 pips on that effect. So it's just so difficult, Mike, to be able to look at one event of everything that's going on and say, right, well, I'm going to trade that because so much can happen in between those points. It's really the difficulty. It's been a difficulty all year in trying to trade it. If fundamental traders like me and Kay, you wouldn't be buying the euro on what's happening in the eurozone economy. Yet here we are going to the moon. So it just shows you the type of markets we've got at the moment.
Yeah, there's other stuff going on, right? And I think the main reason is the people not having any confidence in the dollar. I am going to say though, and I don't watch them, and we don't watch them. Riot doesn't watch them either. But I've seen a lot of comments about the yen and the July being the best month historically for the yen, and it's a very regular thing happening in the markets that July is a very good month for the yen. Now, again, I usually don't trade those kind of things, but just bearing perhaps in the back of our minds that if it happens, it's been seen before. And but I also looked at a couple of others, and actually July seems to be overall a bit of a wobbly month for the dollar. So are the market already in anticipation of that selling a lot of dollars? That's also the other possibility. Yeah, for the time being, I'm for sure not going to stand in front of these moves, because my overall bias remains the same for the dollar to come down. But yeah, just right now I'm being a bit cautious.
Yeah, and as you can see there from the chart I've got up of the US 10-year, we're seeing US yields coming down, which, when it wants to, can be a big driver of the yen as well. So not really a surprise, perhaps, that we're seeing dollar yen reacting to these yields as well. We're on a bit of a level here, around about 420. So just keep an eye on that if we're breaking down. The market, again, getting a little bit dovish over the Fed. We've had some Fed speakers talking about cuts as well, and whatever, and not ruling out July and this sort of stuff. So that's putting a pressure on things there as well. But this is a decent area to watch. If we break it and head lower down towards closer to the 4% level, then we're probably going to see yen pairs moving in tandem as well. Right, let's go quick look at euro dollar. So we broke out from the 118 overnight. So if there were any barriers and whatnot up there, they all got flushed out. Then we had the pullback. And then obviously second time of asking, we'd already broke the seal and we're off running again. So there is no real signs of seeing where this might stop. If I go into my wider chart, for me, the next level up is up at 119. Yeah, there might be a few little bits and bobs on the way, but 119 for me is the next main number. And then we're talking about the big 120, which is also the 38.2 of this big move here. So that's going to be a pretty significant level should we get up there. Everyone's going to be looking at that one. And if we're sailing above it, you know, the market is going to start throwing questions at the ECB. Well, how high are you going to let this run? Is it going to become a problem? You're going to hear it in every press conference and whatever. The pressure will mount on how far the ECB will want to let this run. So big levels coming up. And if we blow through those pretty easily, then, as I say, that genie is going to be out of control a little bit. Just a couple of others I'm looking at, or trading rather. Dollar CAD. As I mentioned yesterday, I got lucky surviving that move. So I've done a little bit of slicing down here through 136. I'm going to see if this zone holds up a bit better than it did last time. If it does, then that would look like a solid step up of support off these lows, 135.40s. If we go through the bottom of this zone, then we're probably going to be having a look at those lows and again see if we're going to continue the trend. This will look like a bit of a dead cat bounce. If I just put it into the longer time frame on a daily, let's zoom in a little bit. So this will look no different to that there. And then maybe we're heading down. The next big level underneath is this area down at 134.5-ish to 135. Again, a bit of a traffic zone that we've turned around a lot in the past. And below there, well, then maybe we're heading down to the 132s and some other big levels further down. But again, just keep an eye on today. It might just be some flows we're seeing going through on that one. Finally, possibly, Aussie dollar has made the break above the level. I actually trimmed back some of my break trade from 55 previously that I got filled on last week because it wasn't looking all that. But we got a hold here overnight down at the 50, down at the break point, which is what you want to see. And now we're moving on to new highs. Staying above this 65-70 area is going to be potentially important because it is a bit of a pivot level we've turned around previously. when we've stayed above, it's gone on to make some decent gains. So keeping up here, we're probably going to get a move on 66, which is, it's big figure resistance, but not much else there unless there's any barrier of interest going on there. Otherwise, it's just up towards this 66.30 area, then up to 67. So again, this trend is there for the keeping for now. We'll see whether it can kick on. Dollar MEX, that's another one that's motoring on as well. We've busted through the 50 at 1877, busted through those prior lows at 82s. There's a few little bits and bobs just off some prior highs and lows, 59, 60, 62. But it looks like we're just heading towards this 1850, and I'm going to make a big decision about my shorts there. I'm half in mind to get out of all of them and even maybe try along off that level, because it really is a bit of a do. Let's go onto this chart, make it nice and cleaner. It really is a big old level. You can see we've had holds there. Look at that for a hold there. And it's going to be a big level. So yeah, I might flip my trade, or I might just keep a little bit on and go a separate long just on a first test try. Anyway, if I do so, I'm probably going to be looking at maybe from around 55, 56, rather than sticking it 10 pips above the level. What are your thoughts on this one at the moment, Kay? Can we get there?
I've got my take profit in at 1852, mate, and I'll be very happy if I get hit. And if we get anywhere close, it is the mix, so I'm not going to be a dick for 100 pips and just buy if it comes anywhere close. And I see the rest of the dollars maybe stopping a bit. I'm going to take my profit. We've been running this for quite a while. Been pretty nice on the funding as well, on the carry, and but sometimes levels are big enough to respect them and at least have a look at what's happening. And if it really drives through without stopping, we can always re-enter.
Yeah, exactly that. It's a trader's dilemma sometimes, but a good one. You know me, I don't like to give up a winning trade. I like to try and stay on as long as possible. But when you get to these moments, you know, these aren't intraday levels. You know, 2020s, 2023. You know, all the way through. You know, these are big multi-year levels, and they demand respect. And yeah, you've got to treat them as such. So yeah, a bit of a dilemma what I do at that 50 level, but I will be taking some profit. That it will be for certain.
Right. It's quite funny. It's one of those that is extremely quiet during European hours. There's not a lot going on during European hours. We'll have to wait for the US to show us what they want to do with it. I reckon, and I'm even not excluding and looking at how the dollar trades right now, that we hit it maybe today or tomorrow. You know, that 18.5.
Yeah, absolutely. Well, it's making new lows during Europe, so I'm not going to complain. But
no, but it's quiet, right? During European hours.
Yeah. Right, mate. I'm going to kick it over to you, sir.
Okay, what are we going to look at, guys? Oh yeah, I know, Brand, I know. Let me share. Okay, cable. We are now making a move through that 137.40-70 zone, which I have been highlighting for quite a while, and we are now trying to go through it. We are trading around 137.90. There is a small level there, just above 138, around 138.15. But obviously, we now will have to look at this 137.40-70 as a support level. And again, as I said yesterday, I was perhaps a little too cautious, but I've been running those longs since around here, so I decided to take them off on the last day of the quarter. But we're trying to make a move for it, so I'm going to be very interested in seeing where we are going to sit today or perhaps even tomorrow. And as you can see here, the 88.6 comes in at 138.15. I guess it's very possible, because I think, as I've been saying before, that we're seeing momentum funds right now in the market as well, and regularly, and that is supported by the fact that we rarely see, or at least today, we haven't seen more than a 10 pips correction in anything basically since we walked in. Euro dollar, I think the best we had was like a 12, 15 pips or so, just at the start of the day, and then all of a sudden things booted up from 8 o'clock this morning, and so yes, I do think that the model funds already, they will continue to get um, impulses to continue to sell dollars likely, and unless we get a close, a euro dollar cable or whatever below the opening of the day, then they usually um, get less triggers to continue to buy. But we will see. For the time being, they still seem to be keeping the market in their grip. So 134.70, 134.40. And then 138.15, that's the one that we need to look at on the top side. If we start to get back below 137.40, then I reckon we may be in for, whoops, what have I done? We may be in for a bit more corrections, and which may then take us to somewhere back into the 136s, and I would say 136 and a half. We are going to need to be very careful what we do. Anywhere between 136.15 and 136 and a half, I would say, on the cable is now an important zone to watch on the downside as well. But for the time being, it's still very big, okay? Even if we get back below 137.40, I think we may be rinsing out some of the latest joiners in the short dollar camp, and then see a little bit of a move lower there, but we need a reversal in the dollar globally to reverse cable, to reverse euro dollar, to reverse the Aussie, to reverse the Kiwi as well. Kiwi also is now trading above that 60.85.90. We are already through the next little level at 61.0708, but yeah, I mean, it is very big, and here also now you have to look at 60.85. What's going on there? There may be a little bit of correction going on if we get back down, but then we are going to come back into decision time around 60.35, 60.40 if we get back down. But in the meantime, even if it comes down a little bit, I'm really not going to fight this train for now. We could be on our way to high 61s, bit like Ryan already showed in the Aussie as well. That is a fair possibility. I've got similar kind of stuff in the Aussie going on, which point at another 30, 40 pips higher in the Aussie as well from here. What am I looking at? Yeah, the Swiss we need to look at. It's just going, for as long as we are now already under 79.40s, it still looks extremely offered. People are comparing this with 2015. Again, I don't think we are in the same situation, but we will see. So we need to get back above 79.40, 50 already to start just going a little bit neutral, and we are going to have to move back above those lows here around 80.40 to reverse the whole thing, and that is now already 1.5% away, which is already a pretty decent move. Right now. Have you looked at the euro dollar? I forgot, Ryan.
Yes, mate. Yes.
Oh, okay. Oh, Joao, yellow card, mate. We never look at the Dixie. Unless Ryan wants to make an exception, but I haven't looked at the Dixie for 40, 45 years, and I'm not going to start today. I'm sorry. I'm looking at the individual pairs, even if it's a global dollar move right now. We see all the pairs moving in the same direction. Yes. But I'm not, sorry, not looking at the Dixie. As Brian says, I'm a little bit allergic. I do love the Dixie Chicks music, though. Nice bit of country music. Just to close it for today, Euro Swiss, we are through this 93.30, but as I also told Ryan to have a quick look, 92.90 is one. Under there, I'm going to be a bit cautious with my longs right now because it does look like to be just a continuation of Swiss strength. But um, never say never. As I said, second day of the month can be the one where things get a little bit clearer. So somewhere I will allow for it to happen. My risk is very well defined right now, so I'm more than happy to keep it running. If we start to get back above 30.35, I may even add to the position and see if we can make it back at least into the 94s in a natural way. Ryan, back over to you.
Thank you very much. Thank you everyone for coming to the Flow Show. Don't forget, we've got a little bit of data out later on. ISM manufacturing jolt from the US, as well as that central bank panel, Bailey, Powell, Lagarde, UEDA, all up from that later on. So maybe we'll get some comments there. Have a fantastic day, everybody. Take care. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.